All right, y'all. Sorry about that. We had some technical difficulties, but we're back at it again. And let me go ahead and introduce our guest today. His name's Eric Patrick. He runs the Black Market Exchange. Basically, what it is, it's a platform for millennials to get involved with investing in the stock market and that kind of thing. Because I know I'm the type that always looks for new things to invest in, and this was one of them things that caught my eye because the fact that in the stock market, there's so many terms that, I don't understand, you know what I'm saying? But with this platform that Eric and his partner have built, they've allowed it to be a lot easier to understand the jargon, if you would call it that, the jargon of the stock market and things like that. They add a little hip hop twist to it. It's really, really dope. So without further ado, let me introduce my guest today, Eric Patrick. What's up, homie?
Hey, what's up, everybody? It's Eric Patrick, the Hip Hop Stock Doc, and just to let you guys know, the name simply comes from, as was mentioned, that we try to incorporate the hip hop element or music element into the investing advice to make things cool. And even one of the things that we have is a verse of the week where we'll take some lyrics and we'll break down those lyrics. So, if stocks or bonds was mentioned, we'll kind of elaborate on that. Then the doc side comes from, I'm actually a pharmacist by trade. I went to Howard University's College of Pharmacy. And then the stock part, of course, just speaks for itself. So for Black Market Exchanges, our goal is to just to educate people about investing, particularly millennials. I felt like growing up in my household, we really weren't, taught these things, and my parents probably didn't know too much about investing either. And I think that as a person of color, I don't want to say that we're at a disadvantage in terms of the information isn't available. I just feel like it wasn't presented in a light that was relatable. And so that's where Black Market Exchange came from. And a lot of people will actually think like, okay, so Black Market Exchange, so it's just for Black people. And that's not necessarily true because the term in the Black actually means to be in good financial standing. So when you think about Black Friday, a lot of these companies out here, specifically ones on the stock market, are trying to get in the black. So at the end of the year, everybody like us is going out buying all this stuff, and it's helping their revenue so they can get in the black at the end of the year. But we don't think about that. We just see a sale and we think it's great. So I want to use Black Market Exchange to educate people and to basically to change everybody from consumers to investors. So when I go out somewhere and I'm in the grocery store, I'm like, oh, I see Kraft on the shelf. I should be like, how much is their stock price? I always buy Kraft products. Maybe I should invest in them. And that's what the goal of Black Market Exchange is, but to also just make it cool. We add that hip hop element in there so people can be like, oh, they use that Boosie verse out there. And they were talking about mutual funds. Like, we always hear about the Balenciagas in the rap songs, but we don't pay attention to the investment concepts that are in those same songs. So that's pretty much what the goal of Black Market Exchange is and how we get started.
That's really dope, man. That's really dope. I guess you answered my first question, which was how'd y'all get the movement started?
Oh,
But yeah, I think oh, go ahead, go ahead.
So the way I really get started personally, when the Facebook IPO dropped in 2011, I jumped on because everybody's like, oh, Facebook is gonna be on stock market. So right. I got in and I bought it at the first price, and it actually dropped by 50% in like a month. So I was like, crap, but I'm gonna just hold on to it. But I really wasn't in the game. And then about a year ago, I was like, man, let me get really more into it. I don't really know about it. And everybody always says that investing is associated with accumulating wealth. So let me just really see what this is about. I started watching CNBC in the morning times before work and just kind of looking up stuff. And I was realizing, like, one, it's not as hard as people make it seem. And two, a lot of the terms, like you mentioned, the lingo, it all means the same thing. So if you hear a company say, oh, our valuation is 15 billion, and then you say our market cap is 15 billion, it means the same thing. Yeah. A lot of times people say, oh, I want to invest in stocks, and then somebody will say, oh, I own equities. It means the same thing. So I think that's where people get lost in translation, and we want to help people to not be lost in translation.
I got you. Yeah, that's really dope, man, because I'm gonna tell y'all a story. Like me, I'm always on Instagram looking for like cool stuff to check out and stuff like that. And they popped up on my radar. I started checking their podcasts out. Right now they're doing this thing with the investment apps. They got a lot of dope stuff going on. And I just feel like, as millennials, you know, we need to know, you know, the type of things to invest in and really start investing our money instead of, you know, just buying the J's and stuff like that, like y'all always talk about on your show. You know, it's cool to buy the J's, but why not own stock in Nike? You know what I'm saying? Stuff like that. So,
because, you know, if you think about it, you might get, Nike might have a dividend, and let's say, you know, their dividend is $2 per share a year. Well, if you have 100 shares in Nike, now mind you, you know, it might take you some time to build that up. But let's say you have 100 shares in Nike and you get a dividend that they pay out every 3 months. But over the course of a year, it's going to be $2 per share. Well, you just got $200, and that's a pair of Jordans. So come Christmas time, you can get them Bread 11s or them, you know, them Legend Blues, whatever, and basically the stock paid for it itself. And on top of getting that dividend, the stock is going up also. You know, like these are tried and true companies. A lot of people, I think, feel like you have to be this analyst and you have to know what stocks are here. But just think about stuff that you buy every day. I mean, a lot of us are buying J's. A lot of us are buying, you know, Ralph Lauren and stuff like that. And it's just like, well, let's just see what are they on the stock market, and let's see how much it costs. Maybe I can get on these companies. You know, something like, you know, Netflix is like $600 right now. You might not be able to buy Netflix, but Microsoft is like 40. That might be a little bit more affordable. You know, do you fly? I fly Southwest all the time. Southwest stock is like $44. That's not that unreasonable. You know what I mean? I mean, if you think about some of the other stuff that we purchased throughout the week, you probably spend that same amount of money and you could have just been putting that somewhere else to make some money, you know?
right. Yeah, that's really dope, man. Yo, hype beast, y'all hear that? Invest in Nike, man. Invest in this, all the things that you buy. Look on the stock market and see, you know, if they're offered. You know what I'm saying? Because that's something that I learned from y'all. That's something I'm about to start doing. Because honestly, I shop at Whole Foods like it's my job, bro. Like I shop there like at least 3 times a week. So, you know, once y'all talked about that, I started looking into Whole Foods and I'm about to start investing with them. You know
I mean, and a lot of times just read the packaging. I mean, Whole Foods is on the stock market, but read the packaging. Last year, Tyson Food actually bought Hillshire Farms. A lot of people probably don't know that. So, you know, you could be, let's say as a consumer, you'd be like, you know what, I don't like Tyson's food. Their chicken is terrible. And I only buy Hillshire Farms products. But you don't know that Tyson's Foods owns it. So you're actually giving them your money. Right. You know, not saying that's a bad investment, but it's just something just to be aware of. I remember one time my wife and I were at this gym, and it was like one of those little Herbalife facilities where you kind of just work out with the people. And they pulled out this scale, and the scale said Vita Goods on it. And I was like, oh yeah, Kroger bought them last year. And my wife was like, how do you know that? And I'm just like, because I'm just always like listening to stuff. And to know that means like, man, Kroger is making good investments out here. They're buying stuff that other people are using, even though that's not a direct effect on the grocery store. At the same time, that's a health product that's going to be associated with the grocery store. So, you know, I'm not saying don't get the stuff that you want. It's just think about how to get those things, or maybe cut back some. You know, J's, I remember when J's was coming out every 2 weeks. I don't even know if they still do. I don't even pay attention. Yeah, maybe get one a month instead of every 2 weeks, and that other week off, just get, you know, try to use that money to invest. That's just, you know, that's kind of what we want to promote.
That's really dope, man. Really dope. Okay, so say I have, you know, some money and I'm the type of guy that's really a go-getter, and you know what I'm saying, I want to get my dough back fast, like super fast. You know what I'm saying? Like within let's say a year. So say I'm looking to short-term invest, whether it be a 1 year to 3 to 4 to 5 years. You know what I'm saying? Short-term investing. What do you think as far as, you know, good places to put my money in the stock market while playing the stock game, or any kind of strategies that you may have that you may be using that you want to share with everybody?
Well, actually, and I'll actually let you know this, in terms of for your tax purposes, a short-term investment means something that's 1 year or less. And a long-term investment is anything over a year. So even if you're looking to just buy something for 2 years, that's considered a long-term investment when you file your taxes, because you're going to have a different tax percentage if you own a stock for 6 months as opposed if you owned it for 6 years. So that's just kind of something to keep in mind. When I think of short-term investing, though, just personally, I like to view it as it could be in stages. So am I looking for this short-term investment? Am I trying to be on some Wolf of Wall Street stuff where I'm going to buy a penny stock at $1 and sell it at $1.05, but I'm gonna buy a whole bunch of shares? Or am I looking for something that's cyclical? So a way to think about a short-term investment for money, think about when people want to get fit. So what's New Year's resolution? Everybody's like, you know what? I want to get in shape. I want to get in shape. So what happens? Weight Watchers is doing well. Everybody's buying Weight Watchers. So what you need to think about is, okay, Weight Watchers on the stock market. Maybe if I buy Weight Watchers stock in November or December, when the stock price is still fairly low, all of a sudden from January through April, the stock price is probably going to go up because they're going to have more revenue from everybody buying that. So that's going to be a short-term investment because you're only trying to get in for a few months. And once that stock price goes up, you sell, because when the summer comes around, everybody's got their beach bodies. Ain't nobody using Weight Watchers no more. So Weight Watchers isn't really going to be considered a long-term investment. But when you think about somebody like Apple, where I know you mentioned short-term, Apple did this 7-to-1 split where Apple's stock was almost $700 a share. And they did this 7-to-1 split where basically they divided those into 7. So if you owned 1 share, they turned it into 7 shares. So let's say if Apple stock was $700, now instead of having 1 $700 stock, you have 7 $100 stocks. And that allowed more people to buy in. So Apple stock actually went up from $90 to $130 it hasn't even been a year yet. Yeah. So, I know somebody that got in around that time. So they've made, $40 a share in less than a year. That's not bad at all. But Apple is long-term, because if you think about it, and we mentioned this on, I think, our first episode of our podcast, Apple bought Beats. And if you think about it, okay, Beats is in the headphone game. They're in computers now, like HP and stuff. And think about it, Bose has always been like the entertainment area. You know what I'm saying? Like your surround sound, your home theater, whatever. Well, if Apple is buying Beats to improve their sound, because they're not like them them earbuds. Them things is trash, bro. I got iPhone, but them things is trash.
I'm still as fuck, man.
So now you can get those Beats headphones on Apple's website. But if you think about it, why stop there? Since Apple's getting into the television market, why not make sound bars? Why not make home theater systems? So now that's going to challenge Bose, and Apple is a whole ecosystem company in itself. So that's just something to consider long term. Short term, it's like, oh, Apple's just buying them because of the headphones. But maybe they're trying to get Beats for the the marketing and the technology that they have to build something greater in the long term. So, definitely look at just some of the tried and true companies. For short term, look at cyclical things. Airlines tend to do well in the summertime because that's when everybody's taking summer vacations. Retail companies tend to do well in the wintertime because of Black Friday. So, come November, December, all these retail stocks are going up. And then after January, they start to come back down. So try to look for trends. It's funny because the first trend I ever found when I started investing was with Scotts Miracle-Gro. And all of a sudden they were talking about it on the news. They were like, Scotts Miracle-Gro stock is jumping. Well, in the beginning of the year, just like Weight Watchers, everybody's getting all the materials to plant for the springtime. So Scotts Miracle-Gro they're getting more revenue. Everybody's buying into the company, and come April and May, all the flowers are blooming. Everybody's lawn looks great. Now the stock is going to kind of level off some because nobody needs to do that stuff anymore. So for short term, look at something that could be cyclical. Think about what you do every day, the companies that you buy, and see how, is this a cyclical thing? If it's a food company, what foods are offered that are seasonal? Like think about, sweet potato pies and stuff like that. Look up Sara Lee. Maybe Sara Lee has a stock and they have these things. So try to find things that are cyclical. For long term, look for things that either have a dividend, because you're going to have your big name companies like, General Electric, Ford, stuff like that. Their stocks aren't too expensive, but they give decent dividends. So every 3 months, you're going to get a check. Mm-hmm. A lot of people call it income investing, because every 3 months you're going to get a check from this company, regardless if the stock goes well or not. And I think for long term, that's what you should consider. You should look into stocks that have dividends. You should look into stocks that might have great growth. A lot of people talk about how Facebook is, buying up all these companies, and, Facebook just has a lot of great growth. I mean, some people were even talking about Facebook having money at some point in time, where it was almost like a Facebook bank, where you buy stuff through Facebook, so you can just put money in, almost like a PayPal account, but it's Facebook. So try to find companies that have great growth potential, but then think about it from, you know, what's going on in the here and now also. You know, I like to use companies that people are familiar with. So Twitter, you know, when I first got on in Twitter back in like, I think 2010, and I was kind of late getting on, but at the same time, you know, it was jumping, it was really popping. But what happens with social media, everybody's looking for the new thing. Then Instagram came around. Now we got Snapchat. Well, a lot of these younger kids out here that are in high school or younger, they don't even use Twitter. Everybody's on Snapchat and Instagram because they like pictures. They want to see something or a video. So for short term, that's good for Twitter. But what about when we get older and we're not using Twitter as much? I know I don't use it as much. But what about those kids coming after us that aren't using it at all? Well, all those companies that paid all this money for ad space on Twitter are now like, well, why am I paying all this money for ad space if nobody's even using the platform? Maybe I should stop doing that. So that's why Twitter stock hasn't increased the same way Facebook stock has. You know, when Twitter had their IPO, it jumped up. But since then, it's been between like 20 and 40 bucks. I think now it's like at 50, but it's been one of those things where it's just like they've been struggling and struggling. And a lot of people think that they should sell. A lot of people think like a company like Google should buy Twitter and maybe do something else with it. But, you know, these are the things that you have to think about, like when you're investing. And it's not something that you have to go to school for. Like, I don't have any finance major. I don't have an MBA or anything. You just try to think like, you know what? This platform specializes in this. How does that affect me as an investor? If I'm trying to make money, what can I do to make money off of it? And think about it from short-term and long-term in that perspective. So, you know, I try not to give people specific companies. I try to teach them how to look for companies and then think about how is this company going to perform.
Mm-hmm. That's what's up, man. You you went in on that comment.
Yeah, man, I get hyped when I start talking about this stuff, man. So my apologies for kind of.
No. That's perfect, man, because people need to hear that. You know what I'm saying? You even, you know, privied me to a bunch of stuff that I didn't even know. You know what I'm saying?
That's
and
exactly
you talked
what
about
our podcast is for. Our podcast, we want people to start thinking the same way.
Dope, man. Really dope. Really dope. You talked about stock splits as well. How Apple did the stock split, and now, you know, Netflix is getting up there. You know what I'm saying? As far as say I wanted to invest in a Netflix, should I wait for the stock split? Depending, like, it's not really been said whether it's really going to or not, but should I bank on a stock split and invest now, or kind of wait and chill out and see what they're going to do, see if they do the stock split, and then wait for that and then invest into a stock split? And I guess this could go for any company, but I know like streaming on the internet is really the new wave and is really the wave of the future. So I just wanted to get your insight on that real quick.
I think either way it's a win. I mean, Netflix seems to go up. Netflix just reported their last 3 months earnings report, and their user volume, and the stock jumped 80 bucks in a day. So, you know, it's almost like the stock is $500 and man, I can't afford that. But if you buy one share, you just made 80 bucks in a day off of that one share. So, you know, when I say investing, you have to think of it as a numbers game. A lot of people, you know, I'm going to get back to the question, but a lot of people think like with penny stocks, it's like, oh, I can get some penny stocks and I'm gonna make a lot of money, but you got to put up a lot of money to make a lot of money. You know, if a penny stock jumps 100% in a day, that means nothing if you only put in 10 bucks. You know what I'm saying? You got to put in a G if you want to make a G on that 100%. So it's a numbers game. If you have a stock that's fairly expensive, and let's say the stock is $100 and the stock goes up 20%, you just made 20 bucks. So that stock is more expensive, but that 20% jump actually meant more than that 100% jump on the penny stock. So, you know, think of it that way. So in terms of with Netflix, it's not bad necessarily to buy now because Netflix is going to continue to do well, especially with all their programming. I mean, I love House of Cards and Orange is the New Black. Them shows is fire.
Oh, yeah.
So as they can, and every time I look up on Netflix, they got a new show. You know, every time they keep coming up with stuff. So personally, I would wait for the stock split just because if you get in now or if you get on the stock split, the stock is going to be a long-term investment anyway. So you're going to make money. But I think the stock split will just allow you to be able to get a bigger foot in the game. So let's say if it's 600 now and they do a 6-to-1 stock split, then instead of buying that one share, you can buy 6 shares. And the benefit of the stock split, I'd have to double check to see if Netflix has a dividend. But if they do have a dividend, that means you're going to make more money on the dividends. You see what I mean?
Right.
You know,
Yeah.
if you own one share and their dividend is $1 a share, then you're gonna make $1. But if they do a split and their dividend is still $1 a share, then now you're gonna make $6. You know what I'm saying? On the dividend side. So personally, I would say wait till the stock split. And I actually heard that they're gonna vote on that in June. I'm not sure what the split is going to be. Like Google did a stock split that was a 2-to-1. Google stock was $1,000 and they did a 2-to-1 split. So the stock just changed to $500. Like to me, that was dumb. I don't know why they would do that.
Yeah.
Recently, Visa did a stock split. Their stock was $240 and they did a 4-to-1. So their stock dropped to $60. And, you know, Costco just picked up Visa. They dropped American Express and they picked up Visa. So that's good for Visa. So, you know, things like that, I would say wait for the stock split. Because as the price gets up and up, they got to consider it, you know, because people just can't afford it anymore. Chipotle is the same way. I mean, Chipotle is ridiculous, bro. I think Chipotle is like $700-800 right now. Nobody's buying Chipotle stock. They need to do a stock split ASAP.
For real, for real. Because I need to get in on that for sure.
Yeah. So that's what I would say about Netflix. I would say just kind of wait it out to see what the split is going to be, because the split might not even be nothing. It might be 2-to-1 and it's still $300. But I will wait to see what it is first.
Gotcha. All right, man. I appreciate that. All right. So say I'm, you know, your novice investor, and, you know, I don't really have a lot of money. Like the bills are really tight right now, but I really want to get in. You know, I've been listening to y'all podcasts and everything. I know what I want to do. I know what I want to invest in. You know what I'm saying?
Yeah.
But I just don't really have the money. What are some ways for me to, you know, find money to, you know, start investing if I didn't have any, or if money was limited? You know what I'm saying? What are some ways that I could find ways to make that happen?
I think the best means to do it, and we actually did a case study called the Mickey D effect, where we had people send us their total. So basically they tracked their spending for a work week, and either they kept their receipts or they looked at their bank statements, whatever. And it ranged anywhere from $40 to $450. Like that's a pretty big range. And most people actually fell in the $100 to $150 range. So I feel like those numbers are like, my partner thought it was kind of surprising, but actually I didn't, because, you know, you don't think of these things. When you wake up, you know, you might stop at McDonald's, you grab something, and then you go to the gas station and you grab something else. And then after work, you know, you stop over here and you grab something real quick. That stuff adds up. And I think people feel like they don't have the money, but you just got to realize what you're spending it on. You know, not even thinking about those J's. Think about those 3 times you went to McDonald's during the week. That was $15 that you could have just put aside to start investing with. And I always tell people there's no true minimum to start investing. You know, a lot of people say you should have a certain amount. I mean, I would say at least $100 might be a good range. But I mean, even if you get $10, just try to find. I mean, Sprint stock is $5. So, you know, you got to like think about, okay, what can I afford? Or maybe I can set up a plan. So what you should do is track your spending for like a month, or go back and look at your bank statements. Be like, okay, I was at happy hour this day, or I went to the movies on this day, and add all that stuff up and see how much you spent over the past month and divide it by 4. That'll give you an average of what you spent per week on things that you absolutely didn't need. When you get that number, I say, instead of trying to focus on taking the whole amount, because you still got to live, you know what I'm saying? You still want to go out to the movies or whatever, kick it with your friends. So maybe take a third or half of that amount and then use that money to invest with. And let's say if you feel like, okay, maybe after a month, I only have like $50. I don't feel like that's enough. Well, get yourself in an investor standpoint, because companies report their earnings every 3 months, right? So maybe, okay, I get $50 in a month. I'm going to set myself up as a business, and every 3 months I'm going to buy stock. So after 3 months, if I'm saving $50 a month, I have $150 now to buy stock with. And you can do that every 3 months, treating yourself as a business. So look at your balance sheet. Okay, I have this much money. I have amount to buy this much stock. And, you know, maybe you can split it up into different areas. So maybe $50 will go to this company because it's a safer investment. And then $50 will go to this because I want to actually kind of get a little bit risky with it, you know. And that's why I did the 10 apps in 10 days, because I want people to see that there are different platforms out there that can either be something that you just kind of use as a savings account, or you can actually use it to kind of get in the game and try to, you know, make something off of it. So I would say just reevaluate your finances. A lot of people will be surprised at how much they spend on things that they don't realize and that they don't need. So to me, I would say that would be the first step. You know, just maybe even get a budget if you don't have one. My wife is real good at budgeting. She sets, like, we go to the grocery store, man. She says, we're going to spend $80. And I'm like, whatever. And we get to the register and it's like 78, 90. Like, she does, I don't know how she does it, but she does it. So if you can get yourself on a budget and just try to save, even if it's just $5 a week or whatever. I mean, I think a lot of us, at least in our age group, can save $5 a day at least. But if you can't, you know, try to do maybe $5 a week. You know, set a realistic goal for yourself and then set a time frame for where, like, okay, I can start investing at this point. But if, you know, and if you're unfamiliar with the market, while you're saving up that money, you can get yourself familiar with it. Watch these TV shows, you know, CNBC, Fox Business. Look at Wall Street Journal and Bloomberg. You know, see what they're talking about. See what things are hot. See what the lingo is. So now when you invest, oh, I know what that means. I know what oh, the volume was up today. I know what PE ratio or their earnings per share. You know what that stuff means and how it relates to the investor.
Cool, man. Real cool. Real cool. Real cool. Yeah, and then you also talked about, you know, the 10 apps in 10 days thing that y'all are doing. And quick story, I wanted to, you know, really jump in and invest in multiple different things, you know what I'm saying? And I listened to one of their 10 apps in 10 days on an app called Acorns. And, you know, they, you know, let me know the information about it. I set up my account. You know, I had a little bit of trouble, but honestly, Acorns customer service is really good. They set me up with the account and boom, now I'm investing. You know what I'm saying? Yeah. So, you know, just talk about, you know, your little 10 apps in 10 days thing y'all got going on, because it's still in the process. I know y'all got another one y'all are dropping tomorrow. So, you know, just let the people know about that platform that y'all have set up.
So to touch on with the Acorns instance, my wife was having trouble signing up too. And when I called them, so the bank that she uses, they have a second security like thing that you have to go through. And that's what was hindering the process. So when I called them, they kind of gave me a workaround to be able to sign her up. So, you know, I was hearing that some people were having some issues and some people were able to get in fine. So definitely, you know, for people out there to hit up Acorns, where? Okay. Sorry about that.
It's all good.
You know, life happens, man.
For sure.
But basically, so we're doing 10 apps in 10 days. We didn't include the weekend because the stock market is open Monday through Friday. So this past week, we want to get people to know about some of these non-traditional brokerage accounts. So a lot of times you have these traditional ones like E-Trade, Fidelity, Charles Schwab. These are some of the big name companies that you hear about. But then some of these lower name companies like Acorns, Betterment, Robinhood, you know, you might hear about it, but you don't know too much about them. And so we want to get people to be aware of these companies. And so we started with Acorns, which is just kind of like a glorified savings account, in that you put your money in and they use the roundups, like your keep the change or, you know, way to save, you know, things like that. So if you spend like $4.50 on something, Acorns will take the other 50 cents and put it in your investment account. And once those change amounts hit $5, it automatically invested for you. And honestly, for me, you're not going to get like super big returns off of it, but it helps you to save in ways that you wouldn't have known. I mean, I looked up after like a couple months, I was like, dang, I got $300 in there. And I didn't even know it. You know what I'm saying? And I do have it on a recurring deposit. I have $5 I put in every week, but that's not that bad. Just $5 a week on top of my keep the change. And like I said, I look up and it's just like $300. So, you know, that's what that app was about. And the rest of the apps we talked on Betterment, Loyal3, you know, so a lot of these apps like Loyal3 helps you get in on IPOs. So GoDaddy just had their IPO and it's actually on Loyal3. And with IPOs, regular people like us, we can't get in on those. They leave those to the big name investors like Barclays and Goldman Sachs and stuff like that. So it's like by the time you get in, it's too late. You know, when I don't know if it's Etsy or Etsy, however you say that, the company's name. I think it's Etsy. They just had their IPO and the stock shot up 100%. But that's before people like us could buy it. Mm-hmm. So they had this thing where they call it the first trade. And you basically, all these big name investors are buying up shares and shares and shares before we can. And by the time we can buy in, it's too late. So Loyal 3 allows you to buy in before it's too late. So, you know, that's a way to kind of diverse. You don't have to put all your money in there, but you can put some if you want to get in on an IPO that they offer. And just the rest of the apps, it's just pretty much just enlightening people. We give a review, we give pros and cons, because there are, I mean, everything's got the good and the bad. You know, we let people know what platforms they're on. All the apps are free. They don't have any minimum deposits, but some of them have restrictions on how much you need to invest. Like the one we're going to touch on tomorrow is called Motif Investing, and you actually need at least $250 to buy a Motif. But you know, that's just kind of like what it is. That's just an opportunity cost that you have to weigh. But we also give a tutorial of the app. So a lot of times you can look at reviews of an app, but all you're reading is what somebody said. You're not really looking at the app. So this 10 apps in 10 days was so people can actually see the app. I actually recorded a screenshot of my phone, and people can see me navigating through the app, see how it works and stuff like that. And to give people an idea of, you know, oh, this one might be cool for me. You know what, that one, I probably wouldn't like that one so much. You know, I know a lot of people love the Acorns one. A lot of people did. But I actually had somebody comment and said that the Betterment seemed better than Acorns. So, you know, everybody's going to have a different perspective. I actually have an account in both. So, you know, I like to try to spread my stuff around because each one is going to be different. In Betterment, I put some money in, and after 5 days, I had earned $1 a day from the account. Acorns doesn't give me that much, but I still like Acorns because it helps me save money that I wasn't aware of. Mm-hmm. So, you know, these are the reason that we are promoting some of these apps. You know, I'm not saying we're for or against, because I don't work for any of these companies, but I felt like they were good apps that I use and that I just wanted to share with everybody. I feel like people should know about them.
That's what's up.
You know, man. I think everybody should just check out. It's on our YouTube page, Black Market Exchange. Everybody can see them. It's actually got a playlist called 10 and 10, and you know, people can just see all the ones that we have up there so far. Okay, great. That's really dope, man. And you know, with this platform, you know, I really just like to get people inspired and get people excited about being successful. You know what I'm saying? So that's really why I you know, had you on this interview. So I definitely appreciate that, man. And real quick, you know, I'm big on, you know, positivity, being positive, you know what I'm saying? Staying motivated, you know, different things you can do throughout the day to, you know, be successful, you know, different books like How Successful People Think, you know, that was actually in the Inspired Thinkers book club, which me and Eric are also a part of. But real quick, I see you post like constantly, you're constantly on it, you know what I'm saying? Some people try to tell me that, like, should I tone it down? Like,
nah, you good, bro, you good. Like, to me, because, you know, a lot of people have problems, like, you know, delivering content daily. Like, I know with us, because I'm a songwriter as well, and content is big, bro. Content is really big, and if you're not constantly posting stuff up, people will forget about you real quick. So I'm big on, you know, when I see people that are delivering content daily, I like to figure out, you know, how do you stay focused? Do you do certain things in the morning? Like, do you have an agenda, a scheduler that you write these things down in? Like, what's your process with it?
I mean, honestly, when I started, I just basically set up a format. So I was like, on this day, I'm going to put this out. On this day, I'm putting this out. And on this day, I'm putting this out. And I was like, I believe in work ethic. That's just the type of person I am. And I'm just like, I need to make sure people get something on these days. If I'm saying I'm going to deliver something, I need to deliver it. And I felt like, okay, I need to give people an element of everything. So let's say, I like to say that the company is a mix between Khan Academy, CNBC, and WorldStar. In that we got the teaching element of Khan Academy, the stock element of CNBC, and the hip hop element of WorldStar. And so on Mondays, we have Market Mondays, where we give you that CNBC, oh, this is what's going on in the market, this is what's popping type atmosphere. And on Thursdays, we got a teaching component. And I feel like people need at least one element a week to where they get news to get them familiar with the news. And then also they need one element a week to learn something, because that's what we're here for, is for education. So that's where I came up with that. And I mean, basically I was like, you know what? I tell myself, I don't want people to think that we slipping. Like, that's just kind of my motivation and my routine. Like, stuff has got to get out. I mean, I was up last night till like 2 in the morning doing all the 5 apps for this week, because I was like, people need this stuff and I want them to have it. So I'm gonna make sure I get it done. I don't think that I necessarily have a set route. I mean, you know, I get up, I, you know, do all the normal stuff, but I think it's just more so just the drive side of me. Like, I really want people to share in the same thing that I'm doing. I want people to realize, like, this stuff is pretty cool. It's not just looking at a whole bunch of numbers or some dude in a suit all day long talking about stuff I don't know about. Like, this dude got his hat on backwards, rocking J's just like me, and he talking about making money through investing. So that's like my motivation. And I just want people to share in the same enthusiasm that I have. So that's kind of like my main motivation. And one thing with the stock market is something happening all the time. I mean, if you look at a site like ESPN, it's constant updates on different things in sports, and the stock market is the same way. So I think that my routine is simply just to stay in the know, to stay in what's going on. I mean, somebody that told me about the Netflix stock split that may be coming up, I was like, where'd you hear that at? Like, I didn't hear about that. Like, I was ashamed almost that I didn't know that somebody that was in the talks. But that's kind of just my motivation, just to stay on it. You know, I look at my family as well, and I'm like, you know, I want to have something for them. I'm about to start an investment account for my daughter. She's like 6 months, but I want to have it by the time she gets to high school. She got like 20 racks in investing already. Right. And I'm like, how many of your high school friends got that? Like, that's the stuff that kind of motivates me and keeps me going in terms of, you know, like a routine wise.
That's cool, man. Yeah, I wholeheartedly agree with that. You know, some people don't have routine. Some people, it's straight up drive that, sorry, that really gets them going. So real quick, what's your favorite book? What kind of books do you rock with? You know what I'm saying?
Actually, I would say it's maybe two, just for the fact that one is more of the investing side and one is going to be more so on the thinking side. For the investing side, I would say it's the Standard & Poor's Guide to Money and Investing. And it's simply my favorite because it's an easy read. You know, it's short, it's got pictures in it, and it basically covers everything in the stock market, you know, from stocks to bonds to mutual funds. What is a stock market? You know, why is the stock market considered, you know, a secure investment entity? And it just kind of touches on every single thing in there. It's got charts in there. It's got examples. I mean, it's such a great book, and it's just easy to carry around. It's not hard. The other book I would say is the Blue Ocean Strategy, and that's by W. Chan Kim and Renee Marborn, and it's actually about creating a market that doesn't exist. So in the Blue Ocean Strategy, if you think about the market, everything is a red ocean because everybody's like a shark. Everybody's going after the same people, so it's just like blood everywhere. So it's called red ocean. Well, in the Blue Ocean Strategy, you want to create something that there's no one else there, so it's just you and no one else can be trying to go after your market. So if you think about Cirque du Soleil, and they talk about this in the book, Cirque du Soleil actually was like, you know what, the circus, we don't want to be like the regular circus. We want to attract adults. We want to attract corporate sponsors because those are the people that are going to spend more money. But those people tend to like the more artistic side as opposed to just like the kitty with the animals. And a lot of people don't like, you know, using animals in the circus and things. So Cirque du Soleil was like, you know what, let's create an element that gets rid of the animals. It's like a high class performance art, and it's also for adults and can be for corporations. So Cirque du Soleil didn't just necessarily reinvent the circus. They just made it better than what it was. And so they created a Blue Ocean Strategy because if you think about Cirque du Soleil, there's nothing that can compare to it. It's its own element. There's they own the market share. So, you know, South Yellowtail wine, they did the same thing. You know, everybody always said wine was too sophisticated. A lot of people, especially in America, didn't like wine because of the taste. They like all just the Moscato and stuff like that because it's real sweet. So Yellowtail was like, you know what? Let's try to make wines that are sweet enough but still complex enough for both people. Let's make a wine that somebody that drinks a high class wine will still like, but somebody that wants just a regular, you know, cheaper wine can still afford it. And they're creating a market share that no one else has. And so that's why I think Blue Ocean Strategy is it's a great book because it gives people insight on how can I tap into a market that nobody else has. And that's where Black Market Exchange came from too. You know, I felt like as a person of color, I need something that I can relate to. And I feel like I didn't necessarily invent the stock market. I didn't invent these terms, but I'm trying to present them in a way that it's like, oh, that's what that means. Oh, I understand that now. And it's like, I feel like no one else was doing that aspect. You know, people might have had the idea, but I haven't really seen it put to action or carried all the way through. And like you said, content is everything. I've seen some, you know, some sites that were trying to blend hip hop and the stock market together. And when you look on there, it's like the last post was in like 2012. You know what I'm saying? Like, I don't know if people get discouraged. I don't know what it is, but you got to stay with that content. And, you know, so I would say the Standard & Poor's Guide to Money and Investing and the Blue Ocean Strategy are probably the top 2 books for me.
Cool, man. Cool. Y'all hear that, everybody? The Black Market Exchange was inspired by a book. So that's just to tell y'all, you know, reading is cool. Reading is really dope. You could gain a lot of insight that, you know, a lot of people aren't on that type of wave. So you know what I'm saying? Definitely reading is really dope to get you to that next level as well. So yeah, Eric, I definitely appreciate you. The Black Market Exchange, be sure to check them out because I'm in the game now. I'm on that wave now. Like I'm invested. You know what I'm saying? So y'all definitely check them out for sure. And you know, just go ahead and plug away. You know, whatever you want to talk about, whatever platforms y'all have that you want to share with everybody. You know, just go ahead and just let loose right now.
Okay. Pretty much my website is www.thebmex.com. Every piece of content is on there, except we have a Finance Friday on Facebook. Every Friday on Facebook, we post a finance term, whether if it's asset, liability, equity. We give the definition as well as an example of it. And pretty much, you know, our weekly programming is on Mondays, we have Market Mondays, where it's kind of like a news segment. And we also have Verse of the Week, where we take a hip hop lyric and we just kind of break it down like a short video on what those investment terms or concepts mean. Then on Tuesday, we have our Brent Money and Life podcast. Now, Brent is actually a term for oil, and oil is a big commodity globally, and it affects the stock market a lot. So if you think about it, gas prices are low right now compared to what they were a couple of years ago. Well, that means more people have more money in their pocket. So that means that they're going to spend more at restaurants. They're going to spend more on amusement parks. They're going to do all these things. So all these other stocks tend to go up. So that's why we chose Brent to be that stock element in our podcast name. The money, of course, is the finance, and life is a lifestyle. So we incorporate like hip hop and marriage, things like that in our podcast. Then on Thursday, we have Teaching Thursday. Every Thursday, we pick a term and we answer the questions, you know, who, what, where, when, why, and how. And so, you know, we've done videos on stocks, bonds, IPOs, you know, portfolios, things like that. And then we're doing the 10 apps in 10 days currently right now. We're halfway through, so check that out. And we're actually working on a 5-day crash course, and we're going to call it the In the Black Starter Pack. And so basically, we talked about being in the black means being in good financial standing. So we're going to do in 5 days, we're going to show people how to find money that they didn't think they had. Remember, we addressed that not too long ago. And by the end of the week, they're actually going to purchase at least 1 share of stock. So in 5 days, you're going to find money that you didn't think you had, or even if you have money, that's great. You'll be ready to go. And by the 5th day, you'll be an investor. You'll be invested in something, and you'll get education in between time to really understand it. So that'll be coming out. We plan to drop that sometime next month. So, you know, I'm pretty excited about that. And we got some more things coming in the future. We actually working on an app in the background, and folks gonna love this app, bro. I'm telling you, this is about to be a real game changer. So just stay tuned. Like I said, check out the website. All social media links are on there. We're on Instagram at black_market_exchange, Twitter at BMEX_, and especially the YouTube page and SoundCloud, Black Market Exchange. You know, just check us out, subscribe to the page, follow. You know, please comment. I always recommend people to please comment because we appreciate the feedback and we want to know what you guys want to know about. You know, we want to know what people think about the information. A lot of people say the information is good, but a big question I was getting recently was, how do I start? And you mentioned that. I'm getting great information, but how do I really get in the game? And that's why we're about to drop this 5-day crash course, because now we're going to give people a little bit of order. I think when people see our content, they'd be like, oh, it's a lot of stuff, but I kind of don't really know where to start. Well, now we're going to teach you in 5 days, look at this, look at this, look at this, look at that. And it's going to kind of guide you on your way to go ahead and get started. So, you know, just check us out.
Well, yo, Eric, yo, I definitely appreciate it, man. Yo, y'all are for real like a godsend, because there's so many people I see out here that, you know, have money and spending it on the wrong things. You know what I'm saying? They're not investing in their future and that kind of thing. So I definitely wanted to get you and your platform on here, man. So it's definitely appreciated. I know y'all are going to go far and be extra successful. You know what I'm saying? Y'all definitely got that drive. And, you know, I'm going to do my best to, you know, get the word out as well. You know what I'm saying? Because we all need to be successful. You know what I'm saying? So,
yeah, definitely.
So with that being said, y'all, thank you so much. Thank you for everything. You know what I'm saying? I'm Stevie Zenith. You can reach me on Twitter at SJAYY_spacesuit. Instagram is the same. Y'all need one-on-one consultations or anything like that, just get at me, direct message me or whatever, and we can make it happen. But once again, thanks for joining us, and we out. Peace. Appreciate you, Eric.
No problem. Appreciate it, man. Thanks.